Welcome. Our topic coverage in this review questions is all about in the Book 2 of LTOM, specifically in Section 39, the power of LGUs to levy taxes, fees, or charges, Section 40, the authority to adjust tax rates, and Section 41, the valid tax ordinances and revenue measures. Number 1. Which of the following conditions must be met for LGUs to levy taxes, fees, or charges on any base or subject not specifically enumerated in the Local Government Code or taxed under the provisions of the National Internal Revenue Code? A. The taxes, fees, or charges should not be excessive or confiscatory. B. The taxes, fees, or charges should be enacted prior to public hearing. C. The taxes, fees, or charges should be based solely on the provisions of the NIRC. D. The taxes, fees, or charges should be implemented without any opposition. Answer, letter A. The LGUs may exercise the power to levy taxes, fees, or charges on any base or subject not specifically enumerated in the Local Government Code or taxed under the provisions of the National Internal Revenue Code. However, these taxes, fees, or charges should not be unjust, excessive, oppressive, confiscatory, or contrary to declared national policy. This means that LGUs have the power to levy such taxes, fees, or charges, but they need to ensure that they are reasonable and fair. Number 2. What is the main purpose of setting reasonable fees and charges by LGUs? A. To generate additional revenue for the national government. B. To please the businesses and professions. C. To recover the cost of regulation, inspection, and licensing. D. To limit the power of LGUs in levying taxes. Answer, letter C. The purpose of setting reasonable fees and charges by LGUs is to ensure the recovery of the cost of regulation, inspection, and licensing before any person may engage in a business or occupation or practice a profession or calling. Number 3. According to the Local Government Code, how often, at least, can local government units adjust tax rates? A. Once every 2 years. B. Once every 3 years. C. Once every 5 years. D. Once every 10 years. Answer, letter C. Local government units have the authority to adjust tax rates not oftener than once every 5 years. This means that they can make adjustments to tax rates after a period of 5 years has passed. Number 4. In every 5 years, what is the maximum percentage by which tax rates can be adjusted under the Local Government Code? A. 3%. B. 5%. C. 10%. D. 7%. Answer, letter C. Local government units have the authority to adjust tax rates not oftener than once every 5 years. However, the adjustment cannot exceed 10% of the rates fixed under the Local Government Code. Number 5. After 5 years of implementation, a municipality wants to adjust its tax rate for retailers to the maximum allowed percentage. What would be the adjusted tax rate for retailers if the current tax rate is 1.1%? A. 1.5%. B. 1.15%. C. 1.21%. D. 5.5%. Answer, letter C. The municipality can adjust its tax rate after 5 years, but the adjustment cannot exceed 10% of the current rate. If the current tax rate is 1.1%, the maximum allowed adjustment would be 10% of 1.1% or 0.1 multiplied by 0.011, which is 0.11%. Adding this adjustment to the current tax rate gives us 1.1% plus 0.11% equals 1.21%. Therefore, the adjusted tax rate for retailers would be 1.21%. Number 6. Which of the following is not a requirement for a valid tax ordinance or revenue measure? A. The power to impose a tax, fee, or charge or to generate revenue under the LGC shall be exercised by the sanggunian of the LGU concerned through an appropriate ordinance. B. For any revenue ordinance to be valid, it must conform to the provisions of Chapter 5, Title 1, Book 2 of the LGC, which define both substantive and procedural requirements. C. The approval of the local chief executive is mandatory for the enactment of a tax ordinance or revenue measure. D. The tax ordinance or revenue measure must be published in a newspaper of local circulation, and this publication may be waived only if there are no newspapers of local circulation. Answer, letter D. Options A, B, and C are all accurate requirements for a valid tax ordinance or revenue measure. However, option D is incorrect. While publication of tax ordinances or revenue measures is required, it may not necessarily be limited to a newspaper of local circulation. If there are no newspapers of local circulation, alternative methods such as posting in conspicuous and publicly accessible places may be used. Number 7. What should be included in the written notices of a proposed tax ordinance or revenue measure? A. Copies of the ordinance. B. Position papers from interested parties. C. Secretary's comments on the proposal. D. All of the above. Answer, letter A. The written notices of a proposed tax ordinance or revenue measure should include copies of the ordinance. This ensures that interested or affected parties have access to the actual content of the proposed measure, allowing them to review and understand its provisions before participating in public hearings or providing comments and recommendations. Providing copies of the ordinance promotes transparency and allows for informed public engagement in the legislative process. Number 8, what is the required majority vote of the sanggunian to override the veto of the local chief executive on a tax ordinance or revenue measure? A. Simple majority. B. 2/3 vote. C. 3/4 vote. D. Unanimous vote. Answer, letter B. The local government code in the Philippines stipulates that the veto of the LCE on a tax ordinance or revenue measure can be overridden by a 2/3 vote of all the members of the sanggunian. This means that at least 2/3 of the total number of members must vote in favor of overriding the veto for the ordinance or measure to become effective. The requirement for a 2/3 vote ensures a substantial level of consensus among the members of the sanggunian. It is a higher threshold than a simple majority vote, indicating that there needs to be strong support within the legislative body to override the veto of the LCE. This provision is designed to promote checks and balances within the local government system and prevent unilateral decision-making by any single individual or entity. Number 9. What happens at the public hearings for a tax ordinance or revenue measure? A. Only the local government officials present their views. B. Opportunity for public input is provided when time limitation allows. C. interested or affected parties present their views and recommendations. D. The public hearing is skipped if there is consensus on the ordinance. Answer, letter C. At the public hearings, all affected or interested parties shall be accorded an opportunity to appear and present or express their views, comments, and recommendations. The purpose of the public hearing is to gather input from the public before the enactment of the tax ordinance or revenue measure. Number 10, in general, when do tax ordinances or revenue measures take effect? A. Immediately upon approval by the sanggunian. B. At the beginning of the quarter after compliance with procedural and substantive requirements. C. After publication and distribution to affected parties. D. When the local chief executive affixes their signature. Answer, letter B. Tax ordinances or revenue measures take effect upon compliance with the procedural and substantive requirements. If the effectivity falls on a date other than the beginning of the quarter, it is considered to be at the beginning of the next ensuing quarter, and the taxes, fees, or charges do begin to accrue from that date. For more videos like this, please like, subscribe, and hit the notification bell. Comment your questions and clarifications below. For continuation of this video, please see the link in the comment section.